Okay, recorder's on and audio's good. Thank you very much. Let's see, we get the look at the week ahead slides for 22nd of March 2020. This is going to be a little bit different than the normal ones that I've been doing, primarily because the markets are not the same as what we've been doing in the past. So it's going to have a bent on managing risks in volatile markets. So I'm going to do what we do with a look a week ahead, but then I'm going to have a few extra slides with my thoughts on how I am trading this and how I'm looking at it, and let you guys in on what I'm looking at and thinking about. I'll start off with a disclaimer. This is for educational purposes only. Trading involves the risk of loss of capital, and you should do your own trading and make up your own mind about whether you do any of this. A little bit of background about myself. I'm an ex-U.S. Air Force fighter pilot with master's degrees in both computers and business, and active trader since 1998. Full-time trader since 2009. Technical trader, but I use limited fundamentals, and we're going to talk about that a little bit tonight. Stick around to the end of the presentation. We've got a special offer for those who are not members of either Hit and Win Candlesticks or Right Way Options. The agenda, I'm going to start off with managing risk in volatile markets, then cover a little bit on my favorite chart setups, plus some things that I am considering. We're going to go over the economic and earnings calendars, a little bit of a market overview, some trade ideas, and Q&A, not stock specific, so wait until I actually ask for your individual securities, and then when we do, post only one, and let me know if you're going long or looking at long or short. All right, a little bit about my thoughts on managing the risk in today's markets. Number one is preservation of capital. Live to trade another day. Don't blow out your account. That's primarily number one. Don't worry about making money. Worry about keeping what you got at least. Be smart. Be safe. Don't be stupid. We are in extraordinary times. Given that, we must change when and how we trade. So therefore, we cannot do business as usual, and we will expect the ripples that are in the market here to take some time to dampen out. This is not going to be an overnight and even a 1 or a 2 month event. It's going to take quite a while. Take a macro view of the markets, follow the weekly for any trend that's out there, and when in doubt, don't trade. We have some known and some unknown economic reports and economic and some events that could significantly impact the markets. Next Thursday, we're going to get our first weekly that really has a major impact from COVID-19. I've seen estimates as high as 3 million new unemployed versus 280,000. We're talking what, tenfold? So be aware that that could shock and probably will shock the markets. So in addition to the technicals, we need to be looking at upcoming fundamental events that are likely to move the markets, and one of them was tonight. We knew that the stimulus legislation out there, I thought it was going to pass. I didn't think that these guys were dumb enough to not get something done tonight. The night's not over, but the Senate did not get the 60 votes necessary for a cloture vote, so we're still up in the air on that stimulus. The Democrats are playing their silly games, and so both sides are really playing. I think they're playing a game of chicken, and we can't be doing this. But as long as that happens, a stimulus package, if it gets passed, that could give us a pop. If we stay into tomorrow and don't get it, we'll probably continue the downtrend. So, just be aware of that stuff. Have your phone next to you. Maybe have CNBC on in the background. Don't listen to them, but watch in case there's news out there. We need to adapt to the situation. We need to reduce the number of holdings. That includes long-term holdings and whatever. Position size. If you normally trade 400 or 500 shares of something or a certain dollar amount, you may want to cut it in half or in a quarter. And the time frames. Time frames probably ought to shrink quite a bit. If you were a swing trader looking at 3 to 5 day holdings, you may be only able to swing 1 to 2 days. These markets are flip-flopping like a fish out of water. If you were a 1 to 3 day holder like me, you may want to think about trading intraday, either a 30-minute, 15-minute chart, or as I do it, I do it on the futures and on so many ticks and movement. Take profits more quickly and use tighter stops. That's if you get profits, take some off the table, take some off quickly, and don't let a winner turn into a loser. Be patient. Let the setup develop and don't anticipate it. Don't say, oh, it looks like it's getting. Don't get so anxious to get into a trade that you get in before it's had a chance to give you the true signal. Be more selective on the trades you take. You've got to be more selective on the setups, and you need to be probably more selective on the reward and reduced risk. Be prepared to sit on your hands, and that kind of goes along with all of this being patience. Let a trend develop before swing trading. We're going to need higher highs and higher lows, lower lows and lower highs for shorts, or a bounce on the shorts and a rollover, or a deep drop, maybe a hammer, and then move higher for the longs. I think this is going to take some time before you can swing trade. Don't feel compelled to trade. What is it? The little dog in the Taco Bell commercial used to say, put the chalupa down and walk away. Well, maybe hide the mouse from yourself. All right, my favorite charts, setups, and a little bit about my philosophy of what I'm doing. I like the J-hooks and inverted J-hook. A bounce and a continuation pattern lower. That's what we're in at the moment. And eventually we'll probably get to some sort of double bottom that'll have to happen before I think we really get out of the woods. That's probably sometime down the road, though. Which instruments to trade? Well, volatility ETFs like the VIX and the VIXI. You can either use options if you want to control your risk, because you can never lose more than what you put into it. Be advised that there's going to be a lot of premium in these puppies, and if you actually try to trade the ETFs, they're going to be extremely volatile as well. They could be spready and whippy. Futures, I've noticed the volatility in them has increased quite a bit, where I was able to trade the ES and the YM before. It's so volatile that where I would put my stops at the dollar levels and dollar amounts that I'm willing to risk out there, I can't do it. So I've actually gone down to the micro A-minis, the MYM, MES, MNQ, MY2K. The micro A-minis allow you, they're a lot cheaper. I think they're about 1/10 the size of the others. And my commissions are not 1/10 as much before, but it allows me to trade and keep my risk under control. Well, here's what I talk about my J-hook or zigzag. On the way up, let me see what we get here for our crayons. On the way up, and you do a pullback, and one could wait for the breakout, or you could go long on a break above the bottom here. And a lot of times what I will do is I'll try to go long here with the stop right under the bottom. Or if it goes like this and it goes against me, I know darn well that it didn't pan out. However, that's somewhat anticipating it, and with the high volatilities and the whippiness in the futures markets right now, a lot of times these things will go down and penetrate below where a natural stop would be, and so you either have to give it more or you wait for the breakout and buy the breakout, and hopefully it runs. Now over here to the left that I haven't got shown, if you've got a straight line down, you probably don't have a lot of resistance. But if it has some consolidation over there and congestion, you may want to say, well, I don't want to necessarily buy this breakout because it might stop in here. Or you could go long, take some quick profits, and anticipate that it might stall or stop at some of the congestion off to the left. It's not shown on this chart. The inverted J hook is basically the reverse of what I've just said, where we drop down. Normally we get to some sort of congestion level. That's where these dashed red lines are. We had some congestion over here to the left. It's not depicted on the chart. And then we did a little bit of a bounce. This is a reversion to the mean. Notice my 8, 3 and 8, sorry, the 8 and the 17 exponential moving averages here are basically we bounced up to the bottom here, got into the zone, and then rolled over. That's a beautiful time to go short, either right here or in the breakdown. Okay, lower highs, lower lows, and we get a tighter stop rather than just diving in here. Because if I were to go short right here, where would I put my stop? I don't know, other than going all the way back up here to the top where we did the pivot, that there's a technically supportable level on that one. Okay, let's go on to the next slide. Continuation pattern. And this is what we've been seeing. Now, this continuation pattern could be to the upside or the downside. I'm only going to show the downside tonight because that's where we've been in. We'll dive down, we'll consolidate for a period of time, and with my 1014 level, I usually get a three candle pattern, and this will be an Oreo pattern where you got the black or darkish candles on both sides, and you've got the Oreo cream in the middle. And then when it breaks below the bottom there, that's your entry point, that's your stop level, and when it goes down and gets you about 1 times risk, you take a little off the table and then see what you can do to ride it lower. All right. At some point we're going to get a double bottom. All of these patterns I'm talking about work on any time frame. Double bottoms can work on all time frames. The inverted or regular J hook, as well as continuation patterns. There are 2 areas to purchase, to buy and go long on this puppy. Let me see what we got here for colors. Let me do blue here. We can go long on the prior W here, or we can wait for the inevitable pullback and retest that it holds this level. This is the quote safest of the 2, is to wait for the pullback after the breakout. It won't necessarily have to take as much heat, but sometimes they keep going up and up and up and they don't turn back. I would rather be on the sideline wishing I were in than being in a trade wishing I were not. Personal preference. All right, so let's go on over. Enough of this pontificating from me. Let's go over what we know in the upcoming economic reports and a little bit about the markets. I don't really see anything. A lot of these reports are coming out there February or a couple of weeks ago, so it's not what we're facing today. Now, we have a couple of Fed speakers here, Eric Rosengren, Bostic here on Friday, and Bullard twice, once on Tuesday, once on Thursday. So, but the actual reports, the PMI composite, that looks back at February. Durable goods, February. Petroleum report, it looks at now. So that could be one. We hit $21 and something in the crude oil a few minutes ago. We're going to have GDP and international trade in goods. Again, backward looking by a few by last month. Jobless claims, I put a big star next to it because that's only going to look back a week. So that's where I expect, no matter what we do in here, if we get a rally in here, be aware that jobless claims is going to come out. And you'll have to make a decision whether you want to be long or short when the jobless claim numbers come out. And make your bed and lie in it. Let's put it that way. Earnings calendar is usually important. Right now, these are ones that could go against what the overall market is, if only for a day or two. If you were trying to day trade these, especially for longs, I'd look at surprises and they gap up and run against the market and necessarily against the shortness, against short covering rallies. The ones highlighted in yellow. These are ones that you could look at. Nike's reporting. Who else? Micron. Not a whole lot of progress. And KB Homes. Not a huge number of stocks. The biggies are not reporting. We're pretty much. Oh, Lululemon. It's reporting on Thursday, Friday. All right, let's go look at the market overview. This is what we're looking at on a 10-year weekly chart. We have blasted down through all of these levels that I would have considered support. The next level area is going to be from 2120 to 1890. I know that's a big range, but that's pretty much what I'm looking at. The volume at price level is 2025. I expect that probably this week, I would not be surprised if we penetrated 2120 and went down and touched or pierced the 2125, and we might get a bounce. But we might just get a pause. Now, we did that. Let's go look at the 3-month daily. Let me go look over here. You can see over here about a week or so ago, we tried to stop the bleeding around 2,400. We tried to stop it at 3,000. We tried to stop it at 27. Every 300 S&P points or so, the bulls are trying. You've got people that are nibbling all the way down. Well, my stochastics RSI back in here was a bit positive, and that's where we got the most movement early in March. But here lately, we haven't been doing anything except a reversion to the mean to go lower. Well, if I go and look at a 60-minute chart, 1-hour chart, now we're looking back, I believe 10 days. We've had bounces, reversion to the mean, reversion to the mean. We had a pretty significant bounce up on Friday where we tried to rally, and it just gave up the ghost. And you can see that we're not trending in the micro sense. So if you look at it, we have some very large moves here intraday. But from the macro point of view, we are in the solid downtrend, but have to be able to ride those out. Okay, let's go to a daily. Now let's look at crude oil. Crude oil is trying to hold 22 right now. For those who have to commute or did have to commute, have to drive any, the gasoline is quite inexpensive at the moment. Gold, remarkably, is not in rally mode. The safe haven is the dollar. We looked at the S&P. Let's go look at the Dow. The Dow looks exactly like the S&P. The NASDAQ looks very similar. It did try to hold up early last week, and then it failed. The Russell, we're rolling over my stochastics RSI on all of these. The Russell, the NASDAQ. Now, the Dow and the S&P are further along in the decline. We'll talk about the VIX. We hit levels that we haven't seen since 2008, 2009. I was over in England working 80-hour weeks, so I didn't get to see any of that. I just saw the news over in England where they had long lines running on the banks. All we have now is a run on toilet paper. Here's one that I'm watching quite closely is the British pound. It's trying to rally off of a very low bottom here. U.S. 10-year is below 10%. It got down to as low as 5, then rallied to 1.3 and is going back. Kind of a reversion of this mean. I'm not really sure that this was way overdone when people rushed to cash. And a more normal thing. I talked to a mortgage broker on Friday, and most of the mortgage lending companies have maxed out. They don't have any more money to lend, so people are having to pay about 5% when they should be around 3.5%. Okay, let's go back to trade ideas. I'm going to look at right here. Trade ideas, inverse ETFs, the SQUID, QID, SQQ, VIX, and VIXI. And here are my short trade ideas. And I'm going to go over each one of those individually. All right. Whoops, I didn't mean to do that. I meant to do shorts. So, QID, you can see how it's probably going to break up above this 31 level. And SQQQ, probably going to attack the highs. VIXI, a little bit of a J-hook, and if you look at it on a 1-hour chart, you'll see how it did the pullback. It looks like we're going to probably go back up towards 60s. And VXX, probably doing the same, going up to the 75-80 level. Okay, as far as shorts, what I normally try to do is when we've been in a significant downtrend, there's the downtrend, looking for the bounce, reversion to the mean, and then the rollover. So this would be a short below about 80, 30, 80, 35-ish. Caterpillar, again, had a bounce. Probably a fairly decent idea of a short with the first target around 90. CGNX had a fairly significant bounce. So this is probably one of the weaker ones, maybe only 40 on the downside, I don't know. Church and Dwight may go down to that low around the $50 level and retest that area. What I'll do is I'll go into a 60-minute chart. You're probably going to go to 57. 30, yeah. About in there. They did have some buying at the close, but I think the markets are going to take everybody down. Cree looks like it wants to roll over $30 level or below. Fate, probably one of those that a little more difficult to probably make money. It's going to probably get down to $16, $17, but that's $5. Goose, the golden goose, Canada goose, flattened out here. Stochastics RSI looks like it wants to roll over anything, say below 14.5 or so. JB Hunt just looked like a steady Freddy downward move. JW Nordstrom did a little 3-day rally and looks like it's wanting to roll over. Stochastics rolling over as well. Mattel stabilized for about a week and then rolled over on Friday. And the last one here is Vive. That is a very nasty candle on Friday. I think we're probably going back here to 122 levels or so. All right. All right, said that there would be an offer out here for those that stuck around. They have a special 60-day offer for those who have never tried either Hit and Road candlesticks or Right Way options. Either one of them for $49 for 2 months. I'll personally say that Rick and Doug are two of the best traders that I've ever come across, and I feel fortunate to be associated with them. All right, let's continue. If you want to follow me, I've got Stock Twits on Top Gun Trading. I post things up there occasionally, and YouTube. That's where we're going to have a copy of this recording tonight. And if you didn't know it, we had in the file folder, we have a copy of tonight's slides and of the earnings reports list. All right, I'm going to open it up for general questions. These are not stock specific. I am absolutely surprised that we've got one of the banks was happening. No. Roger Dodger. It was in England in 2008, 2009. All right. Okay. Does anybody have any specific questions? Not stock specific. Oh, you're welcome, Gigi. What's the difference between which two? Right Way options and Hit and Run candlesticks? Right Way options, Doug focuses on options and options education. Probably one of the best options traders that I have ever known. Rick, he will trade primarily stocks. He may use options to trade those. In fact, most of the time he is now leveraging that, but he will focus on the basic setups for stocks. I hope that answers your question, Jake. Thanks, Lauren. Appreciate that. All right. Okay. Don't have any other questions? I'll open it up for individual stocks. If you have any long, short, tell me whether you're going to be long or short. You're already in it or not. Bob D says, I can't see the file folder. It looks a lot like it's a room drive. It looks like a file folder in the upper right-hand corner, I believe. It's in a slightly different place for moderators. But up at the top, let me know if you can see it, Bob. You don't see the slides in the folder. Okay. One's look at the week ahead. And the first one on top is earnings release and economic events. Does anybody else see them? Room files, file folder. We have 221 people in the room. I'm not getting any response. Oh boy. I feel like I'm not talking to anybody, but I'm sure he is. Angel wanted to know. Okay, let me go back up to Tim C. Tim C, what are your settings on your stochastics? No, it's actually stochastic RSI, and it's 7733. So RSI period is 7, stochastics period 7, percent K of 3. If you only have the 3, it'll be a 773. And if you have percent D, it'll also be set to 3. Both of them I use simple. Angel wants to know, are we heading for a recession or depression like the 20s? Personally, I don't know. We'll just deal with it day by day. What gives me pause is that we could have devastation with lots of businesses going under if we have to shut down for 2 months or more. But the part of me that is optimistic says that it's a short-term event and we were fairly healthy economically before we got in to this mess. So we'll probably recover, but it may take a while for everything to shake out. Like to know, wants to know, so staples are things toward survival are the ones to look at. Well, Clorox had a run on it. It lasted about 4 or 5 days. International Paper, they create paper. Who is it that does Charmin and the other toilet paper run? These are all short-lived. I don't know if anybody else is going through the toilet paper shortage, but ours have been empty. Shelves have been empty for over a week. I didn't have that. I heard one guy who had said he had 3 or 4 cases in his garage. So I said, you're part of the problem. So the hoarding. We just had our normal amounts, and we may have to revert to using paper napkins or paper towels. But we'll manage somehow, as long as it's not corn cobs. Do you use candlesticks for your setups? Jake, absolutely. And in fact, if you look at JW Nordstrom, these are the candlesticks, and this gives me the indication that we started lower on Friday. Where was the other one? Mattel, nasty candle on Friday. Cat. Church of Dwight, not so much. Cree, yes. Fate, yes. Goose, yes. JB Hunt, JW Nordstrom. What were we looking at before? Clorox. Went sideways, and when we gapped down lower, it went below about 185 or so. This tells me that we're probably coming back down into this congestion area around 167 or so. I don't know. I was thinking about that too, Lauren, about the, you say government overreach. We may have overdone it. We may not. I don't believe the government's the Americans won't put up with too much interference into their everyday lives. We're not going to turn into a socialist country. We may have to give up, like during this time, we had to give up some of our personal freedoms and our personal choice to be able to come and go as we see for the common good. But I really think that it's going to be long lasting. But that's a guess on my part. Purdue wants he short CHRW, C.H. Robinson Worldwide. Yeah, this one has had some wild candles the last week or so. One thing that's bothering me about that on the short Purdue is the fact that on Friday, when everybody else sold off, it didn't. Now, it sold off from 70 to 64. What did it do on a 60-minute chart? Yeah, towards the afternoon, evening. Um, I don't know. It seems to be holding up better than some. JB Hunt, Steady Freddy to the downside. I like that better as a short than CH Robinson Worldwide. Where's your stop? You know, we got as high as 70 on Friday, so right now it would have to be the above the high of Friday would be your stop, I believe. Blue wants to know, HD, when do you go long? I don't know, but the chart will tell me. And what the chart's going to tell me, whoops, let me do it this way. Let me get the recording markers. All right. When we start going up like this and get to a level and then do a pullback and then start going back up, this is what I'm looking for. Higher highs, higher lows. Looking for something like a channel. I don't know when this is going to happen, but it may not be in the next 2-3 weeks or even 2 or 3 months. We may get some relief rallies, and then maybe shore up something like a double bottom. We're going to have, if Blue, if you join the room or you're in the room, ask us and we'll tell you every day what we see. She went docu. DocuSign's holding up reasonably well. If it can actually rise, there are some that are bucking the trend here. Now, this is probably one that I would consider going long using options. Now, one of the problems is they're going to have premium pumped in them. It's up the stochastics are sized near the top. That doesn't keep me from purchasing, but it gives me somewhat pause to watch. And we do have some overhead resistance, which everything's going to have. Well, let me look at some of the guys that went up on Friday. Well, really just bounces here mostly. I did not see really any of them. Oh, get out of my way. GoGo looks like it's trying to turn around a little bit. It's still a bit early. It's going to have to make higher highs and higher lows. And now we've gone 31 into this, and these are the biggest risers, and I have not seen really any of them that, you know, this would be one, PGen, where I'd look for higher low. The fact I don't like it is $2.95. KRTX, okay. Some of the biotechs now, SPXU, but that's a short. So, I don't know. Let's look at JNUG. Nope. Let's look at gold. It's not bouncing or anything like that. So I don't really know. KK wants to look at Amazon. Amazon and Walmart and Kroger held up, but it only did it for 2 or 3 days. Amazon, I'm going to say that it's got this resistance level around 2004. So somewhere around this 1975 to 1980-ish. And maybe it'll hold up. They did have the scare on Friday about coronavirus in the warehouses and stuff. They had to shut one down in New York, Queens, New York. Um, we're going we're going to see stuff that looks good, and all of a sudden it craps out on us in one day. Walmart, 2 or 3 day rally and then down. Costco, 2 or 3 day rally and then roll over. Um, that's more of what I'm really that I'm looking to see. Hey Joe, how's it going there? You want to look at HL Herbalife? Well, I think Herbalife does look like a short if it can go below about 27.50 on Monday. You can get some follow through to the downside. Oh, thanks, Yuji. And did you find the folders? Yep, Frank. Good. Your folder opens in the bottom left. Okay. The file opens, right? No, Greg, you're right. Not too many trades right now. This is probably a time that I'd be looking to do some things around the house more than anything else. If you cannot day trade or don't want to day trade, don't have the intestinal fortitude for it, tackle that honeydew list. Okay, way to go, Don Curry. Stevie wants to look at RNG. Well, Ring Central looks like to me if it busts through 180, and I think it'll probably follow the market, this might be a reversion to mean to be more of a short than a long. However, if it went sideways or a little bit pullback, and then we had a market rebound and or it also if it does one of these things, establishes a higher low and goes like this, and ignore this one, that could be a long, but I would have to see a pullback before I would authorize you to go long, primarily because we have some overhead resistance that I just don't like. That stuff right in there I don't like. And I'm not pointing out the 50-day moving average. I'm pointing these 3 candles here. We poked up to it around 200 and failed. If we can poke through those areas, it may go to 250. Just might. I want to go long on HD Win. We talked about that. PDFs are in the folder. March 23 to 27. Yep. Snake says he's long. Rad. You know, Rite Aid, I thought it was going to go out of business a few years ago, and it's managed to stay afloat somehow in that it's done reverse splits and stayed tradable. It got all the way up here in December to $23. If we weren't in the throes of this COVID-19 fiasco, I'd say that it's going back here to retest that high. And it could still do that. Around $23. Watch it, see if it establishes that higher low and holds this area above about 16, and then it'll look pretty good. Now, if you were long from down here, you still got a lot. Don't let it fail on you. Don't turn the winner into a loser. PBY this Thursday morning. Took some profits. Just looking at. All right, I'm looking at you, Jake. PBYI. You went long on Thursday. Took some profits just below the 8 on Friday. We had a doji, a very high wave doji on Friday. That's a sign of indecision. I could either be the halfway point of the move, or it could be a sign that it's going to roll back over. So if it starts to move higher out of the box on Monday, fine. If we move below about $7, maybe the low on Friday, which was 739, 740-ish, 7.25 maybe. If it moves below 7.25, I'd be out of it. It's not acting well. Again, what did it do? It rallied for a couple of 3 days, and then it's time to take profits and move on. That's normally what's been happening here lately. IFMK. What? No, I've never heard of that, Jake. iFresh. This isn't Freshly or anything, is it? First of all, I don't like dollar stocks. They're penny stocks. Anything above $2 I consider a penny stock. This one is probably trying to be delivery. I don't know anything about it, but it's probably doing grocery delivery to people, and that's fine. We get and have gotten for quite some time Home Chef and Freshly on a weekly basis. It just fits our lifestyle. Don't have to go out and shop, and it's all delivered here, so that works out. KG wants Kimberly Clark, but Kimberly Clark is KMB, is that right? Oh boy. KMB. That is not good. And you didn't tell me whether you were looking at long or short there, G, but that doesn't look good at all. Look at the area chart. This looks like it wants 115 to 120 area. Yep, looks short really than long. So Apple short. Well, Apple did this reverse of the mean rally a couple, 3 times. This is definitely not for the faint of heart. But we're coming into the areas. Maybe, maybe not. 210. I'd want an intraday bounce on Apple, Jake, before I would do that. Yeah, Rickster, I'm also the same persuasion that when we get to the back end of this, but you know, the stock market is a forward-looking animal. Before we get any real true clues in the media or whatever, I believe that the markets will tell us. And what I'm going to do, I'm going to go back up to all right. See where it says take the macro view of the markets, follow the weekly trend. But if you do the daily with higher highs and higher lows, that'll probably give you the same. Now, you're asking if I have any favorites. I don't play favorites here. Well, a lot of people are going to probably jump on the bandwagon that we might only have 3 major retailers left when this is all over, the ones that have cash. Amazon, Walmart, that would be 2 of them. I'm surprised that Netflix did not hold up better. We're going to get back. What's going to happen is there's going to be a consolidation in airlines. There's going to be a consolidation in, so a lot of them are going to probably go out of business. They're going to probably merge. Restaurants, especially the mom and pop ones, unfortunately, they're going to, and the franchisees, they're probably going to hold up. If they're not fast food, can't deliver, they're probably not going to survive. I've got a local Italian restaurant at the end of the street here. I want to go buy some stuff for them from takeout, just to try to give them some money, give them some business. Hey, no problem, Bob. Greg P, how about Medtronic? All those hearts going out of. I don't know. Can they? Do they have the capacity? Is it all based in China? Is it U.S. based? And then if are they gonna have their workers there? I don't know. It sure doesn't look that way on the charts. The charts will tell us everything. We're not in lockdown here like to, but the traffic last week started to thin out quite a bit, but not really that bad. Yes, Susan, I agree with the hoarding frenzy. I mean, what started to disappear the other day was meat. I think people are putting in freezers or whatever. Right now, I'm counting on what we've got in the emergency stash in the freezer, along with Home Chef and Freshly. Yep, I agree with you, Don. Really no longs unless there be counter trend trades. Maybe an earnings report. All right, Greg, thanks a lot. Appreciate that. Thanks for the post. What are the studies you and ESNQ futures chart? Unirenco and moving averages. Okay, share. Do I have them open? I don't think I have it open. Let me bring up my NinjaTrader. All right. It really depends. I watched the 5-minute charts and the 15-minute charts on the overall markets, and whichever market I want to trade here, I will either do, depending upon time of day. At night, I have to give it larger Unirenco numbers. During the day will be something like 10 to 14, but it depends on the volatility. The other day, MYM. Let's go back here. Right in here. Remember what I showed earlier about a dive down and then a bounce back up and then a rollover? This was the perfect one right there. That was the perfect place to go short. Either aggressively, you would have shorted about 219, or the failure of this area right here. You do notice that we have some high wicks here where it went down and it bounced up, went down, bounced up. So you can't have a super tight stop. You've got to give it enough, which is why I've gone to the micro E-minis. And the micro E-minis, and I set myself a dollar limit of $100, $200, $300, and try to run that trade. Get anywhere between 1 and 5 contracts. Okay, so the Unirenco, let's look at all right. I have some proprietary indicators that I use there, so you're probably not going to be able to use those. The multi-cross that I have there, I use the 8 and the 17 exponential moving averages, with actually the slow being 17 and the fast being 8, both EMAs. And that's where it shows up with the crossing here. So this will be the 17, the one with the dark purple, and the dashed line there, blue, is the 8. I use opening range. I look at swing. I use a chandelier stop that we had developed here in the room, and I use a squeeze. So I can, if anybody has NinjaTrader and they're interested in my setups and whatever, I can share what I can and be willing to work with you. Yep, too bad they quit the, well, but they don't necessarily need the catalog. Go online, Thomas. Hell, catalog's always out of date. Roger, okay, let's stop any more entries because I'm going to have to zoom out of here and get some dinner at some point. Let me go back up, go back up, go back up. Hawk, you know, I don't really know. And I wouldn't dive into both at once myself. Either one works. Do one for 2 months and then flip around to the other one. See which one you like. What was the other chart you looked at for Apple without the bars on it? How do you interpret it? Oh, I use an area chart, and it's the line. It's an area chart with weeklies, 10-period weekly, 40-period weekly, and that just gives me the big view of things. And somebody was talking about COP. I think that was it. I'm running way behind here. Yeah, Roger. Not yet. If you're going to swing trade it, you're going to have higher highs, higher lows. There's plenty of time. My mother has 300 shares of BP, and I'm going to be embarrassed to say where it was at. The one thing that's going to concern me a lot is that with the price of oil in the $20, this says 150, but let's see. Crude oil. Crude oil here around 22 bucks. They're not going to make any money. Can't make any money, can't pay dividends. A lot of, unless we get a big turnaround quickly, the dividends are at risk there. All right, so that's what I would be concerned about. Support area for NASDAQ would say about 5,300. Now you're talking. Talking to NASDAQ futures, I did not look. Greg, next level support's around 64. I haven't weeded these out right now like I did with the ES. And I'm going to have to come up with ones below that because it looks like it's got the possibility of going lower. Now, the other thing is, you were saying 53. I don't see 53. There's a 58-ish if we got down to those. But anywhere between 46.50 to 41.40. I mean, if we don't hold these levels here, the 6,400, I don't know where it's going until it gets all the way down here. Short on macro squish. I was looking at Microsoft earlier tonight. Let's look at a 9 month. Well, It is at an area that it's probably going to attract a lot of interest. It hasn't been to 135 in a while. Now let's look at the 10-year monthly. 130. I think the 130 area maybe down as 115. It's going to get a lot of buyers. Long DLR. Whoops, let me go 9 months. Come on. Jesus. Are you long DLR already? If so, be careful. It looks like it's trying to bottom here around 118 and a half. But it's not quite there yet. Next target on the SQQQ. Right. 32. Back and retest the highs. From that, if we really get ugly, 35 to 36, somewhere in that ballpark. And I'm using, these are volume at price levels, the volume profile. So under studies, edit studies, volume profile. Make sure that you do on expansion to no, otherwise they won't overlap the bars. Put the opacity down to about 20 so you can read it. Then you can see where all the volume is. And they especially for futures in the high volume, the high as S&P 500 and the high value stocks, that works out pretty well. Yep, I totally agree, Rick. Absolutely. All right. Let's look at Snake once. If some of you guys are posting more than one here, guys, that grumbling is not just me, it's my tummy now. Fro, if you're already short Fro, be careful. It may already be bottoming. Stochastics RSI is at the bottom. We've had 3 days here. If it doesn't bust out the bottom, it's only a $6 stock. How much is it going to move? Massey. I usually pick on $20 stocks or higher, personally. Massey's trying to hold in this area. It dipped all the way to 145. Wow. It's trying to hold here at 150. So be careful with either one of these. Stay-at-home economy doing well or somewhere, or online only pickup. Bed Bath & Beyond closed all its stores. They're online only now. Got a note today. AMD, steady Freddy downwards. I think we're ready for another leg lower. ZM. I'll be honest with you. I made a mistake. Someone told me about Zoom, and I looked at ZOOM, and I said, I'm not getting involved in this. It turned out that it was ZM, and they were talking about it at 113. Boo hiss. All right. Sam wants to look at Carnival Cruise. I'm not sure who's going to go on Carnival Cruise Lines anymore. All the old people that were going on them before and keeping them afloat, literally, they're probably going to think twice about getting on another ship. But who knows? If it gets cheap enough. Higher highs, higher lows, like Rick said. LABU. Whoop, LAB, not Blab. Labu. Higher highs, higher lows. We did kind of get a higher high, but I would have been I've been more happy with 25. Stochastics RSI is still pointing upwards though. Aaron, do I have a bias long or short based on price being above or below a specific moving average? No. Aaron, I use moving averages to help visualize the trend, and that's all. Greg P., I agree with your first part of your statement about the trading with the trend. We need a solid reversal before I go long on the bullish side. I agree. I totally agree. And Rick did too. Blue Apron. Do we have a symbol for Blue Apron? APRN? Well, they've already had their pop. And they've had their drop. Is it overdone? Will it go back up to 24 or so again? Depends on whether we have more drastic measures. Things like Blue Apron, Home Chef, Freshly, don't even know if they're even anything other than privately owned. Why are they? I guess they got shortages, Don. Is that why Apple's limiting consumer sales? Yeah, it cost me about $10 a meal. Lucky that my wife owns her own insurance agency, and they do a lot of stuff right now over the phone and remotely using a computer. Those that come in, they're the older farts that are computer challenged, and it's one of those things. Medicare, they got to sign up. They can't let it go. Jake says one of my clients is a business broker. He had a deal pending, a restaurant for sale buyer, and seller both stayed in. The bank pulled out. Okay, that kind of makes sense. And Angel, I looked at Teladoc earlier and did not put it on my list. The time to have bought Teladoc was back over here around 108, 110, or maybe in the dip. But ZM and Teladoc had pretty nice runs. I don't think it's done. It may come back here and retest the 150 to 155, but it gets these big spurts if you get on the right side of the trade. But it's look at these average true range. $18.36, 13%. That's my heart stopping. Okay. I don't think I could take it. Okay, short if it closes. We've already covered the file folder, I think. Called Room Drive. Sorry, I called it the file folder because that's what it looks like. The big oil companies, yep. I think I've already covered those, that they're likely to cut back on their dividends quite a bit. Although there were a number of them that even during the last downturn, REITs and some others were able to continue their dividends, like O Realty, Triple N. I think even BP, even during that debacle that they had back in the Gulf oil spill, we're below the levels for the Gulf oil spill. I personally, I know we're not flying right now, and currently this is what oil should be priced at, But oil's going to come back. As soon as we start moving again, whatever that is, oil will come back. To what level, I don't know. But a lot of these travel things and a lot of purchases are just being deferred. They're not being canceled entirely. Jake wants to know what I have on my MOM chart. Well, these are basically the blue dots and then the red dots below. I use a chandelier stop, which is basically the same as the volatility stop in the room. So these are a volatility stop of sorts. And when you're in a trend down, it'll be blue above. And when you're a trend up, there'll be red dots below. The shaded area, that means that we're in that red, we're in a downtrend. Blue, we're in an uptrend, because the 8's below the 17 or the 8's above the 17. And when we're in chop, stay out. So in the trading area right in here, the zone, that's a no trade zone. Wait till it breaks out above it or down below it. Pretty simple. It's the squeeze really is the TTM squeeze, but it's call it R squeeze, which is basically the same. Okay. All right, folks. We got rub dirt in your arm, wipe it off with toilet paper, or would you wash it off? Rick displayed a symbol list. That's a Steve, 1973 Hog. Let's bring it over for you. That's what I had. All right. Thank you very much, folks. Again, strongly consider joining the room. This is a perfect time to do it. Let us help you. Let us talk to you. All right. You guys take care. Be smart. Be safe. Aloha.